In Stacking Up today, Todd Bubba Horwitz joins me now, and we should really say hola to you today.
Buenos dias.
Muy bien. Let's take a look at your trade. You're taking a look at the peso.
I am looking at the peso.
Is the peso going up or down?
Well, it's been going straight down, but it seems to have found a little bit of a bottom. And as I compare this, I look back at Brexit. You know, markets themselves tend to repeat, and we had a major plunge after the election. And now EWW, which is the ETF that I'm going to use to play it, has now found a little bit of a base. And right around this $44 level seems to be a great opportunity to take advantage, because I believe that you're going to see some movement into the upside. So what I would be looking for here is that just a basic trade is I would just go ahead and buy it at 44. A little bit more sophisticated or a little bit harder trade might want to do a diagonal here, which would be to go out. I'm going to go out to March personally and buy the 44 call. And I'm going to start selling weeklies against it, and I will start with this week, with 2 days to go, selling the 44.50, which I can get about 25 or 30 cents for right now. And then I will sell every week, because what happens is if I can sell more than I paid for, I can actually lock in a profit before I ever get there. Should we get a big move ahead of time, I can actually cash out the trade. So there's a lot of ways to play this. The last way you could look at playing it, if you're ultra conservative or don't understand options that well, you could play it with what we would call a married put. The volatility here is low enough that you could actually buy the stock and buy a put, which would protect a lot of your downside and allow you to stay in the trade a heck of a lot longer.
And let's take a closer look at this now. First of all, you are playing the ETF. So it's EWW, as you mentioned.
Yes.
And that is so much easier than doing the peso futures, which takes a more sophisticated player putting big money down to make that kind of a trade. The other thing is you're managing your risk. You could lose on this trade. You could be wrong. Heaven forbid.
I've been wrong. The next time I'm wrong, I'll be 1 million.
Okay, so you have made it so that you don't lose everything, right?
What I try to do in all of my trades is I try to control risk, and I also like to take out that stop loss. You know, a lot of people will say, let's put a stop loss, and I like to take that out because I don't want to have to make that decision, and I don't want the markets to take me out. So if I can set up a trade that I know my exact risk the day I put the trade on, that's the kind of stuff I personally like to do on a regular basis. I put the risk in ahead of time so that I know, and I'm willing to live with the risk that I took in the beginning. And that's the way that I like to play them, because I don't like when markets sometimes they get too active and they run down to a stop and they take you out and you go, well, what happened? And I'd rather just have my business on, I know my exact risk, and that's it. I don't have to worry about it.
So important to have a plan, understand your plan, and stick with your plan.
Trade the plan, work the plan.
You know it. Thanks for coming on the show.
My pleasure.